Did you like what you saw in the numbers today? And if so, why?
I didn't hate what I saw in the numbers, which is the first time we could say that in probably 5 years. The numbers were good. I mean, they weren't great. They were solid. It felt more like a normal industrial company for quite some time. The last few years, it just felt like a levered bank with a bad industrial business, and now it feels like a much smaller bank with an industrial business that's turning around.
So where were the problems?
It's all power. I mean, renewable business isn't great either, but power gen is tough, and it's still tough.
Nobody's buying.
Well, orders are actually up.
Really?
Orders are up double digits this quarter for the first time in a long time, off a low base.
But that had been the problem, right?
For many years, yeah. I mean, power's been a disaster.
Yeah.
Do you believe it's in secular decline?
No. I think electricity demand is going to remain flattish, not in decline for years to come. I think electric vehicles provides a new opportunity for electricity growth, and I think that's real, but I don't think it's a growth market, no.
How much, if at all, is the 737 MAX issue affecting GE and its aircraft engine business?
Well, the irony is short-term it helps them. They can catch up to production issues, yes. They were 2 months behind. You're working on overtime wages and premium freight and all these major cost issues you have when you're behind. And now you get a chance to catch up. There's a certain point where if demand really falters, then, all bets are off and it gets bad. But for the next 2 or 3 months, it actually helps them. Long term, though, we need to fix the 737 MAX or that's an issue.
Oh, sure. How about free cash flow in general? What are your projections now based on the latest numbers?
Well, the guidance was $0 to -$2 billion. You came in this quarter a little ahead of expectations, so we're tracking to at least better than the bear case. Somewhere in the middle of the pack. It's the first time we've seen stability in cash flow in quite some time. So
what's driving that, do you think?
Well, on the call they said there was some pushback restructuring. So some of it is timing. Some of it I think is probably better underlying operations. I mean, Larry Culp was an operating guy. That's what he did at Danaher. He's a factory up guy. So like on the conference call, the question I asked him was about lean manufacturing and are these factories ready to get better? And and he said yes, they are. And I think that's where you'll see the major improvement.
The stock is what, in the $10 a share area right now? You got an $18 price target on it. What's going to take it there and how soon?
Well, the asset value is worth at least $18, but it's you have a power business that used to generate, call it 50+ cents of earnings. It's generating negative or zero right now. So you've got a big delta right there. A renewables business that can contribute, certainly aerospace could contribute more. Healthcare could contribute a little bit more. I mean, the underlying portfolio is has more than a dollar of earnings power. It's just a question then if you wanted to put a 17 multiple on it, then that's worth 17, 18 multiple. It's 18. But
17 multiple would be pretty high for...
It would right now, right. And it would be in the context of that dollar of earnings is going to something higher, like $1.20, $1.30, not that that's some sort of leveling off point.